In this short video, we'll delve into the intricacies of reverse mortgages, a financial tool designed to help older homeowners unlock the equity in their homes. Whether you're a senior considering this option, a family member wanting to understand it better, or simply someone curious about how reverse mortgages work, this video will provide you with a comprehensive overview. We'll explore what reverse mortgages are, how they work, their pros and cons, and important considerations to keep in mind before making a decision. So, let's get started on demystifying reverse mortgages and empowering you with the knowledge you need to make informed choices about your financial future. In this educational guide, you'll learn if unlocking your equity could make sense for your financial situation, how a reverse mortgage works and compares to other options, the protections in place that make reverse mortgages safer than ever, and why millions of people have opted to use a reverse mortgage as part of their retirement planning. Okay, so what's the catch? There is no catch with a reverse mortgage. However, it's important to remember that the proceeds are in the form of your home equity, and like any other loan, the lender charges interest that accrues over time. Since no payments are required when you sell your home, the balance will be repaid. So how does it work? A reverse mortgage converts your home equity into usable cash, similar to a home equity line of credit. The benefit of a reverse mortgage is that you don't need to pay back the loan month after month. Instead, you pay it all back at the end. You don't make monthly mortgage payments, you still pay your property taxes, insurance, and other property charges. You live in your home as your primary residence. Because you are not required to make monthly payments, the balance of the loan accrues interest. Keep in mind that you can make payments anytime. When can I apply for a reverse mortgage? Reverse mortgages are available to homeowners 55 and older, though some products require you to be 62. Speaking with an experienced loan officer can help determine if a reverse mortgage is a sensible and available option for you. How much can I qualify for? The amount you qualify for depends on several variables, including the age of the youngest borrower, home value, the type of reverse mortgage, and the current interest rate. How will I receive my cash? For most products, you can access your home equity in the way that makes the most sense for your financial needs. Options include receiving a lump sum upfront, setting up monthly disbursements, establishing an equity line of credit, or any combination of all three. What happens at the end of the loan? There is no specific term, and the reverse mortgage ends when you no longer live in the home, including a permanent move, selling the home, or the last borrower passing away. At this time, the balance would be repaid. A reverse mortgage is a great solution for many, though not all. In the right situation, tapping home equity can be an incredible resource and financial tool for retirement. When determining if a reverse mortgage is right for you, it is helpful to ask yourself a few questions. What are my retirement goals and how close am I to accomplishing them? Is my home meeting my needs? Is the cost of living becoming more difficult each year? How long can I live in my home? Do I want to leave my home to my kids? Do they want it? Would an unexpected expense take me off track? Am I still working just for the money? Where will I be in 5 years and where do I want to be? What excites me about life and am I doing enough of it? What dreams are left for me to chase? What's holding me back? Reverse mortgage options. The most common type of reverse mortgage is the FHA home equity conversion mortgage. With this option, at least one borrower will need to be 62 or older. The private reverse mortgage is a great option for borrowers 55 and older and/or have a home valued over $1.2 million. For homeowners looking to keep their current mortgage in place, there is a reverse mortgage second option that allows you to draw additional funds without increasing your current mortgage payment. And yes, you can purchase a home with a reverse mortgage. The reverse mortgage purchase is a great option for those looking to downsize or move closer to family. Now let's look at some ways you could use your equity. The possibilities are endless, but here are some ideas to get you inspired. Maintain a line of credit for health emergencies and surprises. Fill financial gaps in your retirement plan while avoiding selling assets or investments that are still growing. Buy a new home without locking yourself into monthly mortgage payments. Retire early and pay for health insurance until Medicare kicks in. Pay for your children's or grandchildren's education or help your family navigate financial emergencies. Pay for short-term medical emergencies or long-term care. Create a set-aside fund to pay real estate taxes and property insurance. Eliminate credit card debt and avoid new debt. Start a business or fund a passion project. I've heard some negative information about reverse mortgages. Let's take a look at some reverse mortgage myths. Myth: everyone says this is a loan of last resort. Fact: While a reverse mortgage can be a key resource during emergencies and times of need, borrowers are increasingly using their home equity as a means to unlock more possibilities in their later years, such as using the proceeds to travel the world, buy their dream home, or fund a living inheritance. It's your home equity. What you do with it is completely up to you. Myth: I saw on social media that I could get kicked out of my house. Fact: with a reverse mortgage, you own your home, not the bank, and can't be kicked out so long as you uphold the terms of the loan. The lender simply puts a lien on the property to ensure the loan will be repaid, just as with a traditional forward mortgage. Myth: my neighbor told me I won't be able to sell my home. Fact: a reverse mortgage creates zero obstacles to selling your home. Like a traditional forward mortgage, it will need to be paid off at closing, but there are no prepayment penalties, and can sell at any time. Myth: I read online that there are a lot of fees. Fact: with the exception of mandatory reverse mortgage counseling costs and FHA insurance, the fees for the reverse are generally the same as those for a traditional forward mortgage. It's also important to remember that with a reverse, most fees are added to the loan balance, which means you pay little out of pocket up front. Myth: my kids say they'll get stuck with the loan after I'm gone. Fact: a reverse mortgage is a non-recourse loan, which means that if you default on the loan, or if the loan cannot otherwise be repaid, the lender can only enforce the debt through the sale of the property, and cannot look to your other assets, or your estate's assets, to meet any outstanding balance. If the loan balance is higher than what the home is worth, your heirs will not be responsible for paying the difference when the loan is sold to repay the balance. Myth: I heard that I can't leave my house to my kids. Fact: several factors, including your home value increasing over your lifetime, can make it possible to pay off a reverse mortgage and still leave your home to your heirs. You can also choose to take less equity out of your home in the beginning, pay down the balance as you go, or simply use a reverse mortgage to establish a line of credit to be used only if you truly need it, which would help you to retain more equity in the home. The bigger question is, do your heirs want the home? For many children, seeing their parents happy and thriving in retirement far outweighs any potential inheritance they may receive. A reverse mortgage can help with this, so it's worth it to have a conversation with your heirs about what's most important to them. We'd like to thank you for taking the time to watch this educational video on reverse mortgages. We sincerely hope that you now have a clearer understanding of how reverse mortgages work and the potential impact they can have on your financial future. Remember, knowledge is power, and by educating yourself on this important financial tool, you are better equipped to make informed decisions that align with your goals and aspirations. If you have any further questions or would like additional information, please don't hesitate to call, email, or visit our website. Once again, thank you for watching, and we wish you all the best on your journey towards financial security and peace of mind.